Okay, so your checking account, different than a savings account. The major types of accounts at a bank, the two major are checkings and savings, but that's not the only two that are available. We're going to talk about some of the other types of accounts as well. Checking account, though, is the most commonly used account, and that's because the checking account doesn't have as many restrictions on it as the other accounts do. A checking account allows you to make deposits, withdrawals, and transfers, and usually there are no limits to the number of transactions you can make in a month. Savings accounts and other types of accounts will have limits to the type or amount of transactions you can make. The check is an actual, it's a physical order, it's written order basically. When you write a check, you're writing an order to the bank saying, pay this money to this person that I wrote their name on the check, or the business that I wrote their name on the check. Probably not as many, no, not probably, definitely not as many checks get written today as were written even 10, 15 years ago. Because of all of the ability to do the EFTs, the electronic funds transfers, which are electronic moving of funds. So the check is a written moving of funds, and then the EFT is the electronic moving of funds. They do the same thing. It's just writing a check is slower. When you do an EFT, it's pretty much instantaneous. It can take up to a day or two for it to show up in your bank, but it can be the minute you do it. The payee is the person that is receiving the money, and the drawer is the person that is paying the money. So if you're writing the check or you're paying with the EFT, you're the drawer, like a cashier drawer, basically. Okay, so your check has cleared when you had enough money in your account to pay it, and it has been paid. So once it shows up as having come out of your account, then it's known as cleared. The deposit slip, it's becoming rare. Not all banks use deposit slips anymore, but the deposit slip was a slip of paper that you'd fill out with your account. You can either have the pre-printed ones that have your account information on them, or you can get one at the bank that you have to fill out and you put your account information on it. And then you fill out, you have to list all the checks if you're depositing more than one check, and you list the cash and you total it all up, and it tells the bank where that money's going. And you did that at the bank, like to make a physical deposit. You used to always have to do it through an ATM, and then you also used to do it at the teller, but now some banks have gotten away from that, and you don't really have to use deposit slips anymore. It just depends on the bank. Direct deposit are electronic deposits that are made straight into the account, and they have to be cleared before the money goes into your account. So normally, let's say you have a payday and your payday is the 1st. Your employer will generate that direct deposit a day or two before that to give it time to clear so that it will be in your account on the 1st. Because it has to clear before the funds are available to you. Usually for direct deposit, you're talking about a paycheck or a check from the government, something like that. Not like I can't personally do a direct deposit to you. Typically speaking, direct deposits between individuals are more difficult. That's not to say that they can't be done, but they're harder. A hold gets put on a check. So if somebody writes you a personal check and you deposit it in your bank account, if it's from another bank or another state, or for a certain amount, like over a certain amount, then the bank can put a hold on the check, and that means that even though you've deposited it, you don't have access to it until it clears from the other bank. Usually holds are put on personal checks because, banks feel that people could be a little bit untrustworthy and might write bad checks. They're put on any check that the bank seems to think might be suspicious. Like suddenly you have a check for $10,000 or something and you've never had a check for $10,000 before, so that's unusual activity, so they put a hold on that until it cleared. Or if it's like sometimes the bank will have a policy to put a hold on a check over a certain amount, and that amount can vary per bank. So some of them maybe say over $1,000, they're just automatically going to put a hold on it. And then when you deposit a check, you have to write on the back of it. You can either use a stamp like a for deposit only with your account number, or you sign your name, or if you're doing electronic direct deposits, you've electronically signed because you fill out the paperwork that allows for an electronic signature. But a check has to be endorsed before it can be cashed or deposited. One time I deposited a check through the ATM and I forgot to sign the back of it. The bank cannot, it won't process. They can't process it without that signature on the back of it, so they mailed it back to me. So you always want to be sure to endorse the back of your checks. Again, it doesn't have to be. Okay, so once the check has been paid, it's then canceled. And you can only use each check one time. And when you look at a checkbook, they're numbered numerically starting 1 and going to 50, and then the next set starts 51 and goes to 100, and then the next set is 101 to 150, and it goes on and on and on. Every check number for your personal account can only be used one time. So if I get checks printed up and I use checks, say 251 through 300, and then I order more checks, I can't have 251 through 300 again. I have to have 301 to 350. Or whatever, how many ever I'm buying. Because if I've written check 201, let's say, and then I write check 201 again, my bank will flag that as fraudulent because check 201 was already paid and it's canceled. So every check number is only used once. So when you do order checks, if you order them from some institution that's not your bank, they'll always ask you what is the check starting number. You want to be really careful to make sure you put in a number that you've not used before, because otherwise it can cause all kinds of problems at the bank. Okay, it's insufficient funds. When your account does not have enough money to pay a check and it is returned or dishonored, also known as rubber check or bounced. Okay. You get fees from both parties if this happens. So let's say I write a check to the water company and it bounces. My bank is going to charge me a fee for bouncing a check, and then the water company is going to charge me a fee for bouncing the check. And most likely those fees are going to be at least $50 between the two. So it's really not a good idea for a lot of reasons to bounce checks, but it's very expensive very quickly. Overdraft protection is available on most bank accounts, and it pays the check even if there's not enough money. Fees will be charged. There's two types. There's a savings overdraft where they transfer money. From your savings account. Of course, the key to that is you have to have enough money in your savings account to cover what's not being covered by your checking account. Okay, so sometimes that maybe isn't enough. And again, though, they do charge a fee if they have to transfer the money for you. The other one is a credit line. And when this happens, the bank pays and then charges you. Okay, so let's say I write a check for $200, but I only had $150 in my account. The bank's going to go ahead and pay the $200. I had $150 in my account. That means I now owe the bank $50 because they paid an extra $50 plus whatever their fee is. Usually right around 25 bucks. But it depends on the bank. The bank fees vary, so I can't give you an exact fee, but potentially I now owe the bank $75 for this. Okay, ATMs, you guys know about ATMs. You can only deposit usually at your own bank. You can withdraw from any bank, but if you use another bank's ATMs, you get charged double fees. You get charged fees from the bank that you're using their ATM, and you get charged fees from your own bank. Did you guys know that? Okay. Yeah, so, but if you go buy a stick of gum and get cash back, there's no fees. So buy a stick of gum, get cash back. And then your PIN, you guys know about your PINs. I don't need to tell you about PINs. And then